What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the bearded boy wonder, Dave Bartosiak, and today, my friends, it's about our ABCs. That's right, we're going to be doing Alphabet, for the company formerly known as Google. This is going to be an interesting report. So they're reporting after the bell today. Now, they've got that huge fine from the Europeans that is going to affect EPS this week, or this quarter, rather. So that's something to keep in mind when you're making your decision here on Google, is how is the market going to deal with that here early on. So first, let's go ahead and kick things off with the price consensus and EPS surprise chart here on Zacks. As always, the black line corresponds to the right y-axis, which is price. The multicolored lines represent the evolution of our Zacks consensus estimates over time, and these correspond to the left y-axis, which is earnings per share. The red arrows are earnings misses. The green arrows are earnings beats. And you can see here that Google has a mixed history, really, of EPS. So if you see here's a pretty good streak. 1, 2, 3, 4, 5, 6, 7, 8 quarters in a row where they missed earnings in 2014 and 2015. And then a beat, a miss, a couple of beats, a miss, a beat. So they're kind of all over the place, but I think I'm going to make the argument that it really doesn't matter, right? Just the headline, if they beat or they miss, doesn't affect Google that much. What really is going to make the impact is these EPS estimates here. And you could see when these estimates have come down a little bit, that's when Google has a sort of tough time, or at least they're inside of a consolidation. And then when these, when the growth numbers are good, they're increasing, that's when Google tends to move. So recently you have a little bit of a rolling over of these EPS estimates here for Google. I'd make the argument that a lot of that is this European fine that's coming up, but I think that's going to offer up a unique opportunity here to play this in the options market. Yes, of course, I already have a game plan together. And let's just look here first at the detailed estimates page on Zacks. They are Zacks ranked number 3 hold right now. The value style, or the style scores, granted there's obviously not value, tons of growth and not much momentum here. They're reporting after the bell today, so we don't have a lot of time. Just got the rest of the trading day today to figure out if this is something we want to mess with. But let's look at the actual growth numbers here. So revenue growth for Google for the current quarter looks like 18.86%. Next quarter gets a little better at 19.57. Current year number 19.45. Next year's number looks like 16.55% revenue growth. The EPS is a little bit stronger than that if you're looking at the current year numbers, but the current quarter we're only looking for a 16.65% year-over-year move in EPS. And again, I think we can chalk a lot of this up to the European situation. Next quarter looks like 19.31% EPS growth. The current year number is going to round out 22.88, and next year looks like 21.26. So still very solid EPS growth here for shares of Alphabet. And if you look at the revisions here, this is why it is a Zacks rank number 3 hold. You have, over the course of the last week, you have analysts that have come out and increased their earnings estimates. But you also have analysts that have come out and decreased their earnings estimates for the next quarter and next year. So whenever you have that sort of argument happening, where some people are going to the upside, some people are going to the downside, this is what you get. You get the Zacks rank number 3 hold. And then if we want to look at the actual magnitude, what's been the impact here? Gone from 796 up to 821 and trickled off a little bit to 817 for the current quarter. Next quarter numbers are continuing to be healthy though. 830 to 852 to 865. Current year number has gone from 309 all the way up to 34.38 and has retreated a little bit to 34.22. And the next year number has gone from 38.08 all the way up to 41.50. So some pretty good stuff there in terms of the consensus, the magnitude there. In the recent surprise, you can see here, pretty good surprise last quarter, but they're kind of all over the place, and we saw that on the chart. So that's what we have there. Now, on my earnings surprise here, we can see that Google hasn't really moved much on earnings recently. So last quarter, you got about 4%. Prior to that, negative 1.5, negative 31 bips. There's a 3.8% move. Here's a negative 0.47% move, 2.5. So really the last one was June of 2015. The last time we got a really good, solid move on earnings for Google. It's been a while. I keep calling it Google, Alphabet, right? The newly renamed parent company, I suppose. So, we really shouldn't be expecting too much, I don't think, out of Google. Let's get into the chart here, and you'll see that really lots of choppiness for this thing throughout the course of this year, including times where it comes down, flirts with this 50-day, right? Found support there. Get this little rope-a-dope in late March where it comes underneath, and that happened again. So it's kind of, I don't know, muddy waters here. And then they had a nice firm top that got put in at 880, and they blew through that. That was last earnings report. And since the tech wreck, really, heck, leading into the tech wreck, because I believe the tech wreck was here, I think. Anyway, into the tech wreck, got a firm sort of cap on it on the other side of 1,000, and then it did find support in the gap, in the earnings gap, which is surprising. But just a really broad consolidation range here for Google, and just not much direction, just pretty sloppy and choppy. You see the big whole lot of volume coming out sort of in this range between the 970s and the 940s. There's been a lot of action down there, and that area may provide some support should the stock come back down. The obvious resistance is going to be the 52-week high. So very cloudy chart here for Google. Not a lot of, no clear-cut direction. I suppose you could argue this sort of area underneath the 50-day, Google gathering strength again, and then a likely retest, I suppose. That's down at 970 right now. That should provide some support, also the 970s, okay? So we've got a few levels here to check out. Let's bust out the good old bar chart. And stock's at 992.50. So we've got, or the stock's at 992. What we're going to use is 992.50 strike to go ahead and figure what they're looking for out of shares of Google. So on the call side, it's 910 by 20. So we'll call, or 1910 by 20. So we'll call this 1955 rather. And then on the put side, 1970 by 2090. We're going to call that 2030. So looking for almost 40 bucks here out of Google with the stock down at 990. So about 4%, right? So we're looking for about 40 bucks or 4%. So what I want to look at, not the side by side, let's go stacked. Uh-oh. Oh, get out of here. I don't know where Java popped up out of nowhere. Was not looking for that to happen anyway. Before I was so rudely interrupted by Java. What I want to look at here is a very quick turnaround idea for you guys. So I'm going to stay just in this front week after earnings, and I want to show a couple of credit spreads on Google. Just a couple quick ideas. So first, let's look on. I'm going to use the call side of the equation, and let's go out of the money. $40, maybe even a little bit more. So if we're looking at 1030, this is sort of $40 out. I think we can go even a little further out to this 1040 area. And I want you to look at this call spread. Going short this call spread. So you'd be selling the 1040 call for $385, simultaneously buying the 1042.50 for $345. So your net credit on this is going to be 40 cents. The amount of money you're going to have at risk is the difference in strike prices, which is $250, minus that 40, which is $210. So about 19%, almost 20%, but 19%. What you can make here, and all you would need is Google to not go through and close above 1,040 after the report. Okay. Now, granted, Google has a good report. It's going to be an afterthought. It would blow on through there. But remember, you got this European thing happening, right? And I'm not sure what the impact is going to be on the stock price. Now, everybody knows what the European thing is going to be, right? They know they've all adjusted their models already. But that is going to take, I guess, a small, it's a reason for pause, right? At least, maybe. Maybe the stock's already worked it out, though. But anyway, so I'm going to say that a bear credit is short July 28th. 1040, 1042.50 call spread for a 40-cent net credit. So, yeah, 19% isn't, spectacular, but when you're talking about how short it is, it's just a week. I think that definitely makes that more attractive. And then on the flip side, for the bulls, be selling a put spread out underneath here. Now the good news is you've got some areas that have firmed up, right? So sort of the 940s firmed up in the past. Got a little rope-a-dope action, but they've been defended pretty much. So I think I'm going to go down to 940. So yeah, $50 out, a little bit more than the 40, but that's okay. I think you get a little bit added safety. So if you go out to 940s, you've got another scenario. So the 940, 937.50 specifically. I don't know why I made the big box. My tracing skills are not good today. Let's try this again. Okay, there we go. So, if you were to sell the 940, you're going to get 370. Simultaneously going along the 937.50, you're going to give back 335 of that. So in this case, it's 35 cents net credit, and the amount of risk is 215. So here's about 16%. Now, you can massage this to make it look a little better for you if you want. You can use the 950 area and pick up a little bit more, or even this 947.50 area to get your 40 cents. So if you wanted to scoot it up a little bit, you are taking on a little bit more risk because the odds are it's easier for Google to hit 947.50 than it is for it to hit 940, right? But in the grand scheme, on a stock that's trading, as high as Google, percentage-wise, it's actually not much. But if you look at the 947.50, you're going to get 480 for selling the 947.50 put, simultaneously buying the 945. You're giving back 440 of that, and then now you've got that nice round 40 cents number, the same that we had on the other side. Okay. So I'm going to say the bull credit is short the July 28th, 947.50, 945 put spread for 40 cents. Okay. Now, this is what I think is going to happen with Google. Okay. I think Google is going to gap down on the number. I'm not sure where. Odds are, I think it gets down to the 50-day and then finds support and just kind of trickles back throughout the course of the day. I think with that European thing looming, I don't see a blowout number to the upside and these guys just go crazy. I just don't. Plus, we've had a pretty good run, right? So I think the Iron Condor is the way to go here. Because with the Iron Condor, you'd be selling, you basically do both of these, right? So I'm going to say the trade that pays is the Iron Condor. So you'd get 80 cents on the Condor with 170 at risk. So that's a much more favorable percentage, right? Because you're basically, you make on both legs, but you can't lose on both legs. So you can get, if the Condor works out, you can get 47% return on your money in a week, which is fantastic. But what you would need is you would need shares of Google to bounce between 1042.50 and 947.50. So 947.50 is basically all the way down here, and then we already know the 1040s is up on through here. Okay. So how do I decide what I'm gonna do? If it's where I think the stock is gonna go, it has a lot to do with whether I decide to do a credit or a debit. And then how much the options chain is giving me. So if I'm looking at this for Google here, I don't think that Google is going to trend in one direction. If I was confident it was going to trend in one direction, then I'd go ahead and I would put on a debit trade. Because I'd say, okay, it's going to go from 990 all the way up to 1050, and I want to get every bit of that move. Here, I think we get some volatility, some chopping back and forth on Google. It's just my feeling based on how Google's moved in the last several earnings reports and what I believe is setting up. So that's really the deciding factor. Is whether or not I think the stock is going to trend or it's going to chop. So I still think Google chops around a little bit. So that's why I'm looking here on the Iron Condor. That's why I'm on the debit or the credit side right here with Google, right? And then other times we've got, the other ones like Netflix where I had some conviction where I thought it was going to keep on going. And then you get the trend. So then this is one that you'd be looking for a debit trade on, right? So that's the big one. And then the other thing is sometimes I'll see areas, of real staunch support or resistance, and then just try to sell credit spreads on the opposite sides of those two. So that, that's not what's happening here. Here I just think that they kind of chop back and forth. Okay. Short and sweet today here with Google, right? In terms of lottos, I don't think I'd pass on that here, folks. Okay, because it's very expensive with Google at $1,000. These lottos are very expensive, and I don't think that Google's gonna whip around that much on this earnings report. I just don't. I could be wrong. Been wrong plenty of times before. But I just don't see it breaking out to new heights or new lows. I think it just kind of slops around on this report. Okay, so stay away from the lotto on this one, guys. We'll have plenty of those this week, as we're going to have Amazon. We're going to have AMD tomorrow. AMD tomorrow is probably going to be the most fun in terms of being able to roll the dice and find something that could be a huge, potential payoff. This one is just a little, with Google here, this is a more conservative sort of trade, I believe. Very short term, and something that I think is going to work out here for us, all right? So that's all I got here for you today on Live Trader. If you're not already hooked up with us, shoot me those emails, livetrader@zacks.com. We can get you connected with that free 14-day trial. And then, of course, it's only $10, $9.99 a month after that. And we have lots of fun, especially in this Friday, the morning after session. And that's what we're going to have here. We're going to have a morning after on Friday because Amazon's going to report on Thursday. So I want to thank you guys so much for hanging out with me here today on Zach's Live Trader. And I will see you all mañana. Have a good one.